Hey guys, it's Bradley with the Insurance Guys podcast here. We're going to do something a little different for this week's episode. Scott and I actually undershot our episodes, I guess. And we are recording in a couple weeks, but we're running about 1 week shy on episodes. So this week is going to be a re-release of a former episode. You know, Scott and I, we get a lot of agents that reach out to us, and the overwhelming majority of those agents are asking how and why and when to open an independent agency. The majority of those are asking how to buy an independent agency. And I almost every single time reference the Andrew Muller episode 61, because he has such a unique story of how he bought his independent agency. And honestly, for me, it would be the preferred route if I was a young agent and wanted to buy an independent agency and take over someone who's about to retire. So listen to this episode. Really hope you enjoy it. And as always, special shout out to this week's sponsor, CoverDesk. Guys, I can tell you what, me taking on my VA and my agency has been a complete game changer and probably one of the best decisions I've made. Our retention as a new agency is 97.5%, simply because of one fact. We have our VA call all the banks and make sure everything's paid, and reach out to customers when they're late and things like that. Please give CoverDesk a ring. Let them know that we sent you. It's coverdesk.com is the website. Andy Priesman, my good buddy, give him a shout. Thanks. Hope you enjoy this week's episode.
Insurance agents from around the world, welcome to the Insurance Guys podcast. I am your fearless host and leader, Mr. Scott Howell with I Protect Insurance and Financial Services, based out of Huntsville, Alabama. Before we get started on today's episode, please help me welcome. He is a 6'3" sophomore from Saraland, Alabama, Parade First Team All-American, Rivals 5-star recruit, guest speaker at VaynerMedia's Agent 2021 conference coming up. Ladies and gentlemen, he is a fantastic insurance agent and a great American. Please help me welcome the incomparable Mr. Bradley Flowers. How are you, Bradley?
I'm great, Scott. How are you?
I can't tell you how proud I am of you. I want to walk over there and kiss you on the mouth right now.
Please don't do that.
Guys, before we get started on this podcast today, let me tell you this.
That would be the end of our podcast if you do that.
Our mission on this podcast is to help you in any way we can. That is sales, service, marketing, digital, accounting, hiring, firing, and here it comes, guys, compensation plans, processes and procedures. I'm giving you guys a hint what we're going to be talking about today. But before we get started, let me introduce our very, very special guest, and I am fired up about having him on this podcast today. He is a native of Lanesville, Indiana. He currently lives and resides in Charlotte, South Carolina. He has a beautiful, beautiful wife named Alexandra, probably more beautiful daughter named Poppy. He is the president of Mappus Insurance Agency. He's been in the industry since 2005, and he's worked for both regional and national carriers in different roles. His keys to success: do what you say you're going to do. Who does this sound like, Bradley? Do what you say you're going to do. Tell the damn truth. Work hard and be respectful. Ladies and gentlemen, I give you the other incomparable Mr. Andrew Muller. How are you, Andrew?
Hey, guys. Thank you so much. I got to make a correction. You said Charleston, North Carolina. Or you said Charlotte, South Carolina. You said Charlotte, South Carolina. That's what it was. It's Charleston, South Carolina. That's all right. Yeah,
my apologies,
Charlotte's
guys.
about 4 hours away. Not a problem.
Oh, well, I apologize for that. But, man, thank you so much for being on the podcast today. I'm excited to have you on. I love having people on the podcast that have been in the industry for a while, and I love talking to our 250,000 agents that are listening to this around the world about something that we haven't really discussed in the past at all. And today, I think one of the things that we're going to talk about is employee compensation plans. We're going to talk a little bit about your process and procedures as well. But before we get started in all that, let's roll back the DeLorean and go back in our time machine for just a second. Tell our audience how you got started in the insurance industry and kind of work your way up until today.
Wow. So I'll try to make it quick. I did grow up in an insurance family. Both my dad and my stepmom were always in the insurance business. My dad on the life insurance side, and then my stepmom was on the carrier side, working as claims adjuster, claims manager, all the way up through her entire career with auto owners insurance. So I've had the great opportunity of going out on claims with her when I was really small as well as going to visit agencies. And what got me stuck on the insurance industry, specifically on the agency side, is every time we would go to an agency, it seemed like the owner was never there. And I always asked, well, where are they? And the answer was always either they're golfing, they're at their beach house, or they're on a trip that they won from an insurance company. So I said, that is exactly what I want to do. I want to own my own agency one day. So,
that is very parallel to my story. That's kind of what happened to me. I'm like, all the guys I knew who played golf every day when I was in high school were insurance agents.
Yeah. So that was the initial reason why I wanted to go into the business, not really understanding it. But, as I grew older, I started to understand the business and seeing the claim side of things and really seeing how, as an agent, if you're a good agent, you can really change the lives of a family after a claim by making sure they're insured properly. Or if you see the opposite of that, where the agent didn't do such a good job, you can see where it can devastate a family at the same time. Mm-hmm. I saw that growing up. And then so after graduating from college, I got a job with a company called Amica Insurance as a claims adjuster. And Amica's national carrier, they don't work in the independent agency system, but it was a great learning opportunity and a great way to start out, getting to understand the business, handling claims. I did all types of claims, bodily injury, property damage claims, liability claims. I handled them all personal lines. And it just became I learned very quickly that there were so many people out there that were just improperly insured. Mm-hmm. And so I wanted to change that and try to help as many of those people as I could. So I jumped onto the agency side of the business after a few years of understanding the business. And so went to work for a local agency here in Charleston that gave me an opportunity. The owner took a chance on me, and I just appreciate it so much for that, because otherwise everyone else is telling me no. They're saying, you've got to have experience. I'm like, well, I've got experience, but I don't have sales experience.
Right.
Like, just give me a chance. I can prove to you. I know the type of person I am. And so he gave me that chance. And so did a lot of commercial insurance. Unfortunately, that agency got bought out by a national broker. And so I went to another agency. That agency got bought out by a national broker. And so I just kept saying, gosh, I can't let anybody else dictate my future. And that's what was happening. I was like, okay, why did I get into this business? I was like, I wanted to own my own agency. So I literally set out, gave myself a 2-year window to say, okay, let's find an agency that I can go to work for maybe 3 or 4 years, and then have the opportunity to purchase it. Mm-hmm. I'm a really big proponent and big person of the Big I, our state Big I and national Big I, Independent Insurance Agents Association. And so I went to our association here in South Carolina and sat down with them and said, hey, can you all help me find an agency that meets my wants? Mm-hmm. And it was being in Charleston, older owner that was looking to retire in the next few years, heavy on the personal line side. They basically were like, oh, we've got the perfect agency, Teddy Mappus Insurance. And so I literally cold called Teddy, and we sat down, and literally for 6 months, we sat down every single week. We just strategized a plan, and so I went to work for him. But when I went to work for him, we literally had the purchase price already set and the date that I was going to buy the agency from him, which was about 18 months later on his 65th birthday, because he was like, I'm retiring at 65. So this was back in 2015 when I purchased the agency, and since then it's been a fun ride so far. We've been growing like crazy. We've been adding people. We've added a second location, and we're actually in the process right now. I've got boxes all in my office because we're moving to a new location. We're somewhat outgrowing our current one. So that's the quick and dirty story.
A couple things. One, talk about how important it was for you to have all of that drawn out before you started, because I know of someone in a similar situation that did not do that, and the owner never retired. And it's
that never happens.
It led to the person the person who was supposed to buy the agency basically getting out of the business. And secondly, I think you were on either Ryan or Joey's podcast. Talk a little bit about how you financed the purchase of that agency, because it intrigued me, because I think the bank that you use is actually based about 5 minutes from where we're recording right now.
Okay, so you had asked a few things there before I did anything. I'm a very methodical, detailed. I want to know the answers. I want to know if this doesn't happen, what will happen, and if that happens, then what's going to happen from there. So, and I try to plan as much as I can. So, I wrote like a 30-page business plan that I took to Teddy to show him, because he didn't, like I said, he didn't know me from anyone. So he's like, why should I sell my agency to you? Like, I don't know you. And so I had to prove to him why he needed to sell to me. And my main sell to him was, I want to keep the Mappus legacy going. You know, you sell to someone else, you're just going to get gobbled up, and the Mappus name's going to be no more. Probably your staff is going to be no more. That's just what happens. And he still lives here in our community. And so I want to make sure that he can still walk around holding his head up, knowing that he had sold to the right person. So I had to sell Teddy first on what I plan to do. And so you've got to be very, very detailed in that. You can't just go in and say, oh, I'm just going to start writing all these policies and we're going to grow. You know, you've got to have a written plan. The second thing was, before I went to work for him, we signed a legal contract on what I was going to buy the agency for, when I was going to buy it. We left some of the terms open just because there were some unknowns.
Some variables.
But there was a chance, I mean, there was a chance a risk we were both taking. From my side, I'm jumping into this thing like, wow, like, what if we lose a bunch of accounts or something happens and I'm still forced to pay him this amount of money? From his side, he's like, well, what if I can get more in 18 months for the agency than what I'm agreeing to now? But at the end of the day, we both agreed to it, and we were both happy with it. And a lot of people say, you know, the best deal is the one where both people are agreeing to it. It doesn't matter what other people think or what people say in terms of what something should be valued. It's valued at what two people agree to. Mm-hmm. So we agreed to it. So in terms of the actual deal, some pieces of the deal was that all the business that I wrote from when I joined to when I took over the ownership obviously didn't factor into the pricing of the agency.
Right.
Because we set the pricing based on the book of business when we were negotiating up front. And so I basically said, okay, I've got 18 months to write as much business as I can just to help pad the bottom line. And so whenever I go to get my financing, I can use all this extra revenue to support the purchase price. So I was strategically thinking ahead of that. And then moving into the financing piece, the group that I used is called Midwest Business Capital. So they're actually based out of Ohio. They specialize in doing, so this was an SBA loan that I initially did. And so there are obviously a lot of banks out there that can say that they do SBA loans, but I can tell you this right now, if you're looking at getting an SBA loan, don't just work with someone who specializes in them. Or first off, don't just work with someone who can do them. You got to work with a specialist because it's a grueling process. But number two is really work with a bank or financial institution that has worked with other insurance agencies before. Trying to sell a bank on a book of business and the revenue with no supporting collateral, tangible assets is tough unless they've done it before. So that's why I went with Midwest Business Capital. And so whenever I did the deal with Midwest, I promise you, when I bought the agency, I did not put a single dime of my own money into buying the agency. I have not once put any of my own money into the agency. I leveraged the SBA loan. Within that loan, I was able to get about $40,000 of cash back to me at the closing. I also knew that our closing took place in January, and I knew that in March that the agency was going to be getting a large contingency check from Travelers Insurance. And that was another part of the deal that you got to make sure you put out in the front, contingency checks, who gets it. If you sell at the end of a year, which a lot of transactions occur at the end or the beginning of a year, technically that contingency is based on that prior year. If it's not spelled out in your contract, in your agreement, that prior owner could say that that's his. So you got to be careful with that too. And we had spelled that out. Anything beyond the date of our closing was part of the agency and part of mine. So I knew I was going to get some additional money coming in pretty quickly for the agency. I had my own money on the side if I needed it, but I'd never put any of my own money into the agency. I mean, it was all hard work and sweat equity, specifically in that first 18 months, building up that revenue and that revenue stream. So I knew that we were going to have all this additional income coming in to support expenses and whatnot. And I knew that the existing book of business, whenever I did buy it, supported paying off the loan every month as well. So I've never once stressed out about paying any bills at all because I knew the numbers. I knew what to expect. I knew the revenue coming in. I worked my butt off writing new business. And so I just knew it was all coming in. And then about 18 months after the initial SBA loan, I refinanced with a local bank. I sold them on the idea of reoccurring revenue. So I was able to just refinance non-SBA, amazing terms. So now I'm even sitting in a better position now.
Didn't I hear you say that was Service First Bank?
Yes. Yeah. That one's Service First, which is in your backyard.
Yeah, they are. Yeah.
That's the one. Yeah. So, and the cool thing about Service First is that at least here locally in South Carolina, they're willing to listen. You go to a lot of these bigger banks, they're like, well, we need collateral. We need tangible assets.
It's all about on paper. What's it look like on paper? What's the, yeah.
And so I didn't even with my Service First bank note, I didn't have to put the collateral is literally the business. I did not have to put my house as collateral or anything, which I did on the SBA note initially, just in case something happened. But that's not tied into my current note right now. So I was able to work that out of the deal too. So I was taught very early by one of the best insurance brokers I've ever met in my life. Everyone should look her up. Her name's Maureen Gallagher.
I've heard that name before.
Partners. She's with Assured Partners up in Michigan. And she looks like Kathy Griffin, like literally looks just like Kathy Griffin. It's hilarious. But she is the most technical and knowledged insurance broker I've ever met in my life. And what she taught me this through asking underwriters for things, but I just apply it to everything in life. And it's basically you ask for everything like it's Christmas. You ask. You ask for every coverage, every endorsement that you want. You just keep asking for all this stuff, and then maybe they'll peel back some of it. But at the end of the day, you're probably going to get most of it.
So let me stop. Let me stop you right there, Andrew. Tell me exactly how. Okay, Maureen Gallagher is the lady that we're talking about right now. Tell our audience kind of how did you find her, and was she helping you navigate the waters of buying this particular agency while you were going through that process? Is that what happened?
No, actually, so I got connected with Maureen through the second acquisition.
Okay.
So I worked for an agency called Nice Lukens.
Okay.
And Nice Lukens, I opened up their first South Carolina office, and then, I don't know, about a year into it, they sold to Assured Partners. So shortly after I left, and that's when I joined Mappus. But when I was at Nice Lukens, and then certainly Assured, I got to work with Maureen on a lot of really cool accounts. She basically is like the work comp goddess. I mean, she knows everything about workers' compensation.
Right.
She actually runs a program where you can get it's called CWCC, Certified Workers' Compensation Counselor. She runs her own insurance academy, and she just goes around the country as on top of managing probably like a $2 million revenue book of business. She has this academy on the side where she goes around and teaches all this work comp stuff to both agents and large employers. So, I mean, I learned so much from Maureen and just created a great relationship because I would land these appointments with these really large commercial accounts and say, hey, Maureen, I want you to come down and help me on this account. So she could help us win the account. Because, I mean, I'm telling you, she is like unreal. And so I got to work with her on accounts. I just got to know her really well. But she's, on a side note, she's really big into fitness and running, and so am I. So we had a connection there. She's just has been a mentor of mine, somebody that I still look up to and follow her and try to learn from her, both insurance and non-insurance.
Absolutely. So let's talk a little bit today. I don't want to run out of time before we have a chance to talk about something that I think can benefit a lot of agencies out there, a lot of agency owners, and quite frankly, a lot of associate agents as well. I want to talk a little bit about employee compensation plans, and specifically how you structure your employee compensation plans, what that looks like in terms of your agency to try to benefit these agents that are listening to the podcast.
Yeah, so we basically started this profit sharing sharing program. And the reasoning for starting it was at Mappus, we've just been growing so much. And as the lead agent, as the president, as, the visionary for the agency, you can only do so much. Like, you cap yourself out, and you can only answer so many questions to your staff.
Right.
I mean, you can't write all this business and then answer all these questions and then still have time in the day to do all these other things that you want to do. It's impossible. Or you're going to go crazy. You're going to burn out. It was like a revolving door in my office of people coming in and asking questions. And these were questions that I feel like they could answer and that they knew them. But I feel like they had to get justification and they wanted to just make sure they were doing the right thing. And so I basically said, I'm going to give you guys authority. You can do whatever you want. You can say whatever you want as long as you think it's the right thing to do. But you've got to take ownership to it. Basically, I said, I want you to think like an owner. And I'm going to reward you by paying you like an owner and paying you some of our profit. We've got a really nice 401k plan. People are on salaries and our sales staff, they're on good compensation plans. But I felt like as the owner, the only way you could think like an owner is if you had skin in the game. So I said, okay, from here on out, your salary freezes for the service team. Your salary freezes, and the only way you're going to get a raise is through our profit sharing plan. So you have to help make the agency more profitable in order for you to get more money. You need to think like an owner. You need to think like I would think, and not just, oh, well, yeah, we lost that account, but we wrote it for 10 years. That was 10 good years we wrote that account. Sorry to see them go. Right. I'm like, hell no. We're going to fight for that account. We're going to keep it. That's revenue.
Right.
That's revenue, and I want everyone to feel that, because I certainly feel it as the owner. If we lose an account, if everyone's on salaries and nobody's pay changes, whether we make a 10% profit or a 30% profit, the only pocketbook that's changing is mine. And that just irritates me, because that's like other people dictating what you're going to make. So I said, okay, we're all going to be under a similar compensation plan. So what we do is I take last year and this year, it's 15% of our profit. And just to kind of visualize this, let's just say when we do it on a quarterly basis, so let's just say for the quarter.
So it's a quarterly bonus?
It's a quarter, yeah, and it's paid out quarterly in cash. It's not like a deferred compensation plan, like a 401k that gets put into an account and you won't see it till, you're 65 or 70. No, this is like straight up cash that they're getting every quarter. It's instant gratification for them. We take 15% of profit for the quarter. Let's just say, at simple math here, $50,000 of payroll for that quarter. Let's just say there were 5 employees. They all 5 had $10,000 of payroll. They would each get a percentage of their payroll to the overall payroll. So 10,000 divided by 50,000, 20%. So they would each get 20% of whatever went into that bucket for the profit for that quarter. Now, obviously, the payroll is not all equal. One person might get 20%, somebody 15, somebody 10, just all depends.
So the person with the higher salary gets a higher percentage of the bonus. That's how you work it out?
Yes. I've had conversations with that as to, well, does that mean that they worked harder than the others, getting less of the profit share? No, it doesn't. I mean, that person making the least amount, obviously they're getting the least amount of the profit, but they could be the hardest worker. So you could say, okay, it's going to be evenly distributed. I personally just do it the other way, because in my agency, the way people are paid is based on their responsibilities. So that person that is making the most is, in my agency, doing the most work, and they're the most important.
Is that the salespeople?
Except the salespeople, yeah. So this is all service people.
So your salespeople get commission?
Yeah, they're on their own deal, and we've got little special things for them on the side. So they're all separate. This is strictly for the service team.
Gotcha. So I'm sure you have certain KPIs that you monitor to make sure that they're firing on all cylinders. What are some of those KPIs?
Each month we sit down and we have what we call agency health status. We go over all of our lost business, and we go over why we lost it. And we've got it up there, like who the CSR was, whose accounts were these, and we just literally go through them and say, why were they lost? I mean, unfortunately, a lot of them are because the home's sold. This is a hot real estate market here, so we're losing a lot of accounts just because they're being sold. And we pick up some of them, but not all of them. But, if it was an AOR or pricing, well, who did they move to? Why did they leave? Did they go to a company that we represent? What did you do to keep that account? So we go through all that stuff, and that leads to the individual retention rate, which plays a role. We average about a 96 to 97% retention rate throughout the agency. That plays a role into it. And then we also just do the overall task completed for that month.
Number of tasks?
Number of tasks completed.
Okay.
We do number of policies renewed that month, and then we also do the overall premium volume that month, broken out for each CSR, and then we compare it to the previous month. If somebody's like, wow, I felt like I was super busy this month, we'll look at those numbers, and then we'll compare it to last month and say, oh, well, because you had 20% more renewals this month than last month, or you completed 200 more tasks. But if it was lower, it's like, well, why do you feel like you were more busy? You actually did 15% fewer tasks than last month, and you never said the same thing. It's a good conversation starter as well, and figure out what's going on.
Obviously, the ultimate goal in this is to change the think and the mindset of your service people. When you implemented this, how soon did you notice a change, whether it be minute or large? How soon did you notice a change? And also, did you get any pushback? Did you have anybody that said, you know what, I think this isn't a good fit for me anymore? Did you have any of that as well?
I think we noticed the change when everybody got their first check. That was when they were like, oh, crap, this is what we're doing this for.
This is real.
Yeah, so that was whenever we really saw the change. What was the second question?
Did you get any pushback?
I would say no. We didn't get pushback, but I was challenging them more mentally and making them have to make decisions and think about things. So I wouldn't say pushback, but I don't know what I would call it.
Now, did you lower their salary and then say we're going to do this to make up the gap? Or
no.
So to them it looked like an opportunity for bonus, basically.
Oh, certainly. And then that leads to, well, what about the next year? If everybody's just constantly staying like frozen at this salary, I'm not against to increasing the salary, but my rule is, unless you come to me and you give me like solid evidence and prove to me that you deserve a higher salary, then I'll consider it. But other than that, I mean, I'm not going to do it.
You sort of figured out a way to pay commission to your service people is what you've done.
That's exactly what he did.
Oh, yeah.
Hey,
so,
Andrew.
We used to pay commission, and we still do a little bit, but it's part of the profit sharing plan as well.
Andrew, right. I've got a couple of questions for you here. First question, the profit sharing program and then just your total employee compensation plan across the board, is that something that you just came up with, like went to a quiet place for a few days and kind of designed this yourself? Or did you kind of jump on the back of some other people that, like you said earlier, were maybe mentors of yours in the world of insurance and just kind of designed it with them? How did you come up with it?
Yeah, no, it's a great question. First off, I don't think there are any new creations or inventions in this world. Everything is based on something somebody else has done. And that's my opinion.
Andrew, I want to stop you right there. In 1999, I was part of a publishing company in Tuscaloosa, Alabama called Randall Publishing. There was a gentleman that owned that. His name was Pettis Randall, and he told me one time, he said, there are no new ideas, which kind of falls in line with what you're saying right now. You know, everything's already been thought of. Right. But go ahead. I'm sorry.
Yeah, so this is actually a really cool story as well. So, again, I grew up in southern Indiana. Across from Louisville, Kentucky. And so my brother worked for a bank. He was their secretary and dealt with their stockholders. And the bank had gotten sold to another one. And so one of their shareholders was coming in to pick up some shares information on it. And my brother noticed that his address said Sullivan's Island, South Carolina, which is literally 2 miles from my house. I live right by the beach in Mount Pleasant. And so my brother told me. And so I looked the guy up on the tax records and sent him a handwritten letter just saying, hey, I grew up in southern Indiana, see where you have some stock up there and you bank, and like you apparently used to live there. I actually looked him up. And it turns out he was in the insurance business. He owned a wholesale agency, and right there where I grew up in New Albany, Indiana. And so I thought it was so cool. And so I just wrote him this letter and said, hey, I just want to get together just to meet you. And because we both live down here, 800 miles away, whatever it is. And so he got my letter, called me up, and we got together and we just started talking. And his name's Tony Glotchback. He had a super successful wholesale agency that specialized in trucking and transportation all over the country. They were pushing about $50 million in premium around when he sold it, when he was going to retire to move down here. So he was super successful. And so we've, over a lot of weeks and months, we got together and he was just telling me how he did it. And he said, you know what? When we grew the most and what made me the most money ever was when I implemented this profit share program. He's like, I was giving away so much money. I was writing so many big checks to my employees, and I couldn't have loved it anymore because they were just making the business grow that much more.
Right.
And they were just putting that much more back into my pocket. So he was giving out 25% profit share.
Mm-hmm.
And I was like, dude, Tony, I don't think I can do 25%. That's a lot, especially to start out with.
Mm-hmm.
So Tony helped me put this plan together. I used his as a blueprint, but I certainly changed some things. His was a lot more sophisticated than mine. Mine, I pay it quarterly, and I pay it for the previous quarter. But the way that we do it, it always keeps a carrot dangling out, which is important. So whenever the quarter ends, I've got 30 days to calculate everything, and then I can let them know at that 30 days. So 30 days, I have to calculate everything, and then by day 60, I have to tell them what they're going to get, and then day 90, so we're now 3 months past the quarter, is whenever I pay them for that previous quarter. But then, right when that happens, another quarter is ending. So every 30 days, there's something. I'm either calculating the figures. Every 60 days, they're finding out what it is that they're going to be getting and then getting paid every 90. But it's for a previous quarter. So you have to still be at the agency, obviously. So there's always a carrot dangling out there, whether it's this is what I'm beginning to get in 30 days or this is what I'm getting. So that's really important. But Tony Glotchback, amazing person, and he's also helped me consult with other agency stuff as well.
Well, shout out to Tony for helping you with that, because that, in a lot of ways, changed your life. Instituting the profit sharing has allowed, your agency and your people to take the ownership that we just talked about and kind of added rocket fuel to the growth of your agency. And without that, I don't know if you would be where you are today.
And one thing I like about that is one way I like to look at the insurance industry and in my own business too is, a lot of times in insurance, especially, we do things because it's the way that they've always been done. But I think as agents, we need to look at our businesses like they're not an insurance agency. I can't remember who it was. It was somebody we've had on the podcast. It was Matt and Zach, actually, is who it was. With GNN Insurance, they hired this consultant to come in and look at their business, this coach, and he's like, why in the hell are you doing it this way? Well, that's the way the insurance industry, you know what I mean? And this pay plan, I guarantee you a lot of agents are listening to this right now shaking their head, no, I'm not going to do that. But it makes so much freaking sense, And if we look at it as a corporation, as a business, don't look at the actual what the product is. Just look at it as a corporation. It makes absolute sense to do it that way, especially if it grows your bottom line.
Hey, Andrew, do you have an in-house bookkeeper or accountant that's helping you kind of wrap your arms around all this, or are you doing it all yourself?
So we do have an in-house bookkeeper,
and
we do have an external one that I just go to for auditing purposes. This I actually I do it myself. It doesn't take long to do, quite honestly. Once you do it a few times, then you get used to it and know what to do.
Right.
But I do it myself just because I'm a believer that other people in the office don't need to know what other people are making. That's just my thought.
Sure.
We've got people in here that have worked for the agency for over 30 years, and we have people that have been here for 2 years. And some of people might be shocked by
right.
It's it just doesn't correlate evenly. But I base it on work production and work ethic, and what they're not just providing to the bottom line, but other things that from a cultural standpoint, how are they impacting us? And there's a lot that goes into it. So, short answer, no, I do it myself.
So let me ask you the next question I had for you. Had about a $75 million agent one time I was working with, and we were walking down the street one day, and I said, man, I got to ask you a question. You got about 17 producers in your agency, mostly commercial, some personal lines. I said, how did you come up with your overall comp plan relative to commissions and salary plus commission or straight commission? And he looked at me and he said, hell, if you figure that out, let me know, because I think at that time, and I don't know if it's still the case at his agency or not, he's still in business, but at that time, it seemed like every one of his producers was on a different comp plan. But my question to you is, are you willing to talk a little bit about how you compensate your, let's say your commercial or even your personal lines people as it relates to the actual agents that are out there killing it every day? How do you structure their compensation?
I agree with that guy. There's no I don't know what the answer is. Honestly, we have a little bit different deals with everyone.
Uh-huh.
And same thing. It's at the end of the day, like I mentioned with Teddy and I, with our agreement, it's an agreement that you both agree to and feel comfortable that it's a good deal for both parties. In general, we do pay our producers, so it doesn't really matter if it's commercial or personal lines.
Mm-hmm.
We're primarily a personal lines agency. By about 85% of our book is personal lines.
Mm-hmm.
We do a little bit of commercial, and we're growing that a little bit, but pretty much everyone's doing the same stuff.
Mm-hmm.
Everyone is getting paid the same of new business, which is 50%.
Mm-hmm.
And then we have on renewal business anywhere from 30 to 35, 40%.
Mm-hmm.
But some have little base salaries as well, so others don't. So it's just, honestly, it's what the agreement is between me and that person. Now,
Right.
I personally, Michelle, who does all of our commissions reconciling and gets everything reviewed and over to me to approve, I'm sure she would prefer everyone being on the same because it's can be very confusing, making sure that is this new or renewal, because sometimes a piece of renewal business comes in through a download as new, or if it, you remarket it to a new company, well, it's new to that new company, and so for whatever reason, it comes in as new, and so she literally goes through and double and triple checks to make sure, but she has to know, okay, well, based on the producer, it's X, so it varies per producer. I would like to have it more of a same thing across the board, but that's a conversation I'll have to have with them, and for some of them, it would require probably coming down on renewals, and I'm sure they wouldn't like that.
Mm-hmm.
So that's I haven't had that conversation. That's something that could be had in the future. But I mean, quite honestly, the way things are working now, they're working. So.
Well, and I want to speak in front of you for just a second, Andrew. Insurance agents from around the world, get your pen and paper out. I want you to write this shit down. So what we've talked about today is basically how to get employees to take ownership in your agency. One thing that I've implemented, and I can't take credit for this, I want to give the credit to my friend and great American, Mr. Bill Butler, who is going to be on our podcast tomorrow, and I have a feeling that is going to be an epic podcast as well. I was talking to him a couple of weeks ago, and we were having this discussion. We were talking about how to get employees to take ownership in the agency, which is exactly what Andrew and I and Bradley have been talking about for the last 30 minutes. But one thing that I've implemented about 2 weeks ago, and guys, you need to remember this, you need to write this shit down. My other friend and great American, Mr. Mike Stromso, says this. He says, big doors swing on little hinges. Big doors swing on little hinges. Those incremental small changes that you make in your agency over time will have a huge impact. So one of the things I did after talking to Bill, and he does this, I just think this is amazing, and I immediately implemented in my agency. I called my bookkeeper and I said, I want to make a change to the pay stubs. We pay out bi-weekly. She emails the pay stub for each employee to their email address, right? And I said, I want you on the verbiage of that emailed pay stub, I want you in the subject line, I want you to write this. I want you to put this on every single pay stub moving forward for as long as this agency is in business. I want it to say this: pay stub, the date, and then a dash, and then it says, this money is provided by the clients of iProtect Insurance and Financial Services. And I did that because I want them to understand Scott Howell's not paying their salary and their commissions and their variable comp. You know who pays that? The clients that we serve every day. And I just did that, and I know that's a very small change and almost imperceptible change, but I wanted them to know that and to help them understand that, hey, we need to take ownership in this because Scott's not paying us. These clients are the ones that are paying our salary and our commissions every month. So, guys,
Scott's was just the middleman.
Exactly. Scott's literally the middleman. That's exactly right. And that rolls back into exactly what this whole podcast has been about, is how do we get these people to take ownership and act like an owner, right? I mean, that's really the basis of what this whole thing's about. So, I think the other thing, just real briefly before we have to go today, and again, Andrew, I just want to tell you how thankful we are to have you on this podcast. Would not shock me if you had some agents reach out to you to talk a little bit more about your profit sharing plan. Would you agree, Brad?
That will happen.
Yeah, I would definitely agree that would happen. But before we let you go, I want to talk a little bit about process and procedure. I can tell you that you are a process procedure guy. I have some ideas and thoughts about that I'm going to share on a later podcast. But talk a little bit about your processes and procedure and how you've developed those, and if employees help with that. Talk a little bit about that.
When I first came to Mappus, there were no processes or procedures in place.
Right.
At the time, there were 3 CSRs. They really weren't writing any new business, and all 3 had been at the agency for over 20 years. So they just kind of, they all knew what to do.
Right.
And so that worked for a while. But again, as we kept growing and growing and growing, it causes a lot of additional tasks, whether it's an inspection or mortgagee change or non-payment of premium or remarketing a renewal or claim. Things start to get busy, and then that's whenever people start coming to you and asking questions, which goes back to the other things we were talking about earlier. So if you have good processes in place, that can allow for the authority for somebody to do something. If they don't know what to do or how to do it, well, yeah, they're going to come ask it because they don't know. And so whenever we did sit down and say, okay, well, we've got to put something in place, because we're all getting it done, but we're all doing it a different way. If we're going to try to scale and continue to grow, we've all got to do it in the same way, or else it's just the things are going to get lost, things are going to get dropped, and that's going to cause issues. And so we sat down as an agency. We sit down every week, and we do an agency meeting every Monday morning just to kind of regroup and see what's going on. We have a learning session where we try to learn something each week, and everybody's got the chance to talk about anything that they want to talk about. But so we sat down at our agency meeting, and we just said, okay, well, what are the tasks that we are constantly doing for new business, for renewals, for remarketing, for a claim, all going down the list. And we assigned them to every person in the agency, had a few of them to build out. And we gave examples. This is like the way and flow we're looking for. This is how we want it to appear. And so everyone in the agency had the responsibility of building out procedures. And so then we all got back together and we went through them and we said, okay, does this sound right? And then somebody might say, well, I do it a little different, than Chrissy does. And then so we say, okay, well, how do you do it? And then we all say, okay, well, which one's better? Which way's better? And then so we might edit it or say, no, I think Chrissy's got the best approach to this. And then we created our procedural manual. And this was really big, especially for those agencies. I know a lot of agencies are trying to outsource, whether it's Marble Box type of company or whether it's a virtual assistant like a Cover Desk. The only way that you can be successful at that is if you have written procedures that actually work. A lot of people will say, oh, well, can I get your procedures? I'm like, well, you can, but you got to do what's good for your agency. So I can promise you the way we do things here are going to be totally different than the way other agencies do their work. And quite honestly, I want it to be different because we also said earlier, we don't just want to do the status quo. Oh, this is how every agency does it. We want to be different.
Right.
And so, and that goes back to a culture. And when hiring, somebody coming from another agency, that might not be a good fit because they've got all these bad habits and procedures that they've done there that we probably don't do them the same way here. Right. But we did do them as a team, and it was a fun thing to do because otherwise I was like, gosh, this is going to be a big project for me to do.
So do you task your agents with once that procedure has been thoughtfully put to the test, as you put it, do you give one of those people the assignment of, hey, I want you to create this procedure on paper or a document like a Word document that we can actually then save in our procedures folders?
Yeah, definitely. Yeah, that's exactly how we did it.
Do you pay that individual, or is that just one of those tasks that they have on a monthly basis?
Yeah, that's just something, again, going back to the culture and how you think. You should want to do that to help your coworkers and to help us all be better. And I tell people all the time, I'm like, look, I've got this crazy idea or this idea. This is what I want to do. I'm like, you all tell me if this doesn't work, because a lot of times I'm presenting things to the service team and I don't service accounts, I'm not doing that. So I'm like, I think this would be good, but you all have to tell me. I don't know what's working and what's not working. So if something doesn't work, speak up. I'm not the smartest person out there. So I've just got all these crazy things in my head that I would like to try to do. You guys have to tell me if they're going to work or not.
Right. So do you actually go as far as to create a process in terms of like step by step on how to quote a certain type of business as well, or is it more daily assignments and things that within the agency that are more service oriented?
Oh, definitely. Yes to both. So yes, daily task and what to do on a daily basis. But yeah, in terms of quoting, we do have a process based on criteria of say a home, like who we're going to go to, how we're going to quote it. And so we have some basic parameters we stick with in terms of quoting homes, because we do use outsourced servicing as well as our internal people. So we have to have that in place so they know what to do.
Absolutely. Well, man, I appreciate you being on the podcast today. It means a lot to Bradley and I for you to be on here. In terms of just sheer information shared today, if I'm an insurance agency owner, I'm probably taking a hard listen at this podcast.
There's a few episodes we've done with a few guys, Andrew being one. The other one was Troy Thompson.
Yes, which drops today.
Awesome. And it's that practical advice that if you implement it right away, you're going to see results. But on the flip side, it's not something that people want to do necessarily. It's not sexy. You know what I mean? Like we get a lot of agents that reach out to us that, hey, I had one just now on Instagram. Hey, I'm just getting into the business. What I need to do to generate business right now? Well, go listen to Troy's episode, and he talks about knocking on doors. And I promise you, if you do enough of that, it's gonna work out.
Absolutely.
So it's that practical, tangible advice.
Well, for me as a just anti-thought leader in the insurance business and just an insurance,
I love that you coined yourself that.
Yeah, I am. And just as an insurance agent who happens to do a podcast, these podcasts that we have with guys like Andrew, Andrew, I'm sorry we're talking in front of you right now, but these podcasts that we do with guys like Andrew, where we really get in the meat and potatoes of stuff like that. To me, I know the digital stuff and all is probably your jam and your favorite, but for me, these types of podcasts where people can like listen and then go back and listen again, and they're like, holy shit, I hadn't thought about that.
Exactly.
Those are my favorite by far.
I agree. And I think one day you and I will put together a series of podcasts that say, okay, if you're starting an agency, listen to this episode, it's stuff you can get your hands around.
Absolutely.
It's not stuff that's attractive to talk about, but if you are a real agent and you are in this business, you're going to love episodes like this one. So.
Absolutely. Andrew, tell our audience how to reach you if they need to get in touch with you.
So, my email, probably the best, Andrew, ANDREW, at MappusInsurance.com. Mappus is MAPPUS. Shoot me a text if you want. 843-714-9389.
Oh, snap.
Damn. My boy's giving out phone numbers.
Facebook.
Absolutely.
All right, buddy.
Well, Andrew, I'm going to wrap this thing up. Guys, listen, may not be sexy. Some of my favorite episodes are when we get down in the mud and we talk about how to get employees, how to get our business partners to take ownership. I love talking about compensation plans and procedures. One of those reasons is I think it's probably one of my weaknesses and an area that I can improve on. I know there are a lot of agents out there that are probably going to listen to this podcast and then listen to it again to kind of come up with some creative ways to get their employees to buy in. But Andrew, thank you again for being on the show. Guys, listen to me. Get your ass out from behind that desk and go into the big bad world today and go sell insurance. Rewards come from action, not discussion. And we need to get out there and sell insurance. We need to make money for our families. We need to write good business for the agencies that we represent. And we need to write good business for the companies that we represent. Bradley Flowers, I love you.
Love you too, you anti-thought leader, you.
Absolutely. Guys, have a great rest of the week. My name is Scott Howell, and you're listening to the Insurance Guys podcast. We love you.
Thanks, Andrew.
Thanks for listening to the Insurance Guys podcast. If you need to know more about me or you need to get in touch with Scott, you can always reach me at theinsuranceguyonline.com or email me at iprotectins@gmail.com. And if you need to get in touch with Mr. Bradley Flowers, go to bradleyflowersinsurance.com or email him at bradley@saralandinsurance.com. Guys, we love you. Thank you so much for listening. We look forward to being with you again real soon on the next episode of The Insurance Guys. Take care.